Hi, my name's Richard Bell. Welcome to Bell Alliance Television. This is our second live webcast, and we're hoping that the technology works a little bit better than the first one. But if there is any challenges from a technology point of view, just hold on because we'll be back up live before you know it. I'm joined in studio today by Bob Ransford. Bob is a land use and public affairs consultant. Bob, thanks very much for joining us on the show.
Good to be with you, Richard.
So the topic, Bob, is opportunities and cautions. And I think what I would like to do before we get into sort of today's market is just sort of do a visit of what's happened over the last 30 days. And you brought some slides with you. So you want to just speak to some of those slides, please?
Yeah, I think it's important to look back over the long term because in real estate, we've seen an upward trend over the last 30 years, and if you look at that trend line, going back to the year 1978, December of 1978, we're now in a period where we're now seeing the fourth adjustment in that 30-year period, a small downward trend in the market, but if you look at the trend line over the long term, it's been an upward trend line. It's important to sort of zoom in on those, each of those 10-year periods over that last 30 years to look at what happened when we saw those downturns.
So you're going to start us back to about late 1970s.
I'm going to go back to the late 1970s, starting in 1978, and between December of 1978 and December of 1988, again, we saw this upward trend, but we did see an adjustment in the marketplace in that famous downturn of 1981-82, and in fact, there was a 21% decline between December of 81 and December of 82. But then if you bracket the wider period around that, between 1980 and 1985, the market increased 8%. So on the long-term trend line, you don't even see that little blip.
And I remember that time because I bought my first house in 1980, and in my practice in 1982, I was signing people up to 23%. 5-year fixed-term mortgages. And
there were a lot of people preaching doom and gloom at that time, and a few people suffered during that period, but the market recovered. And again, if you look at the next 10-year period between 88 and 98, we remember a decline of over 8.5% in 89-90 period. But again, over that longer period between 89 and 94, we actually saw the market increase 25%. So
some good gains.
Some good gains despite a small market adjustment. Now, if we look at today, we remember that long-term climb that we've just experienced the last 10 years between December of 98 and December of last year. Now we've seen a small adjustment again. It started at the end of last year. There's about a 7.5% adjustment just between December of 2008 or between December of 2008 and this latest month. But that's again probably a short-term adjustment in the market.
I know, we've seen a lot of information in the media, and we see these numbers of declining in price. What do you sort of, when you look at the peak of 2008 to where we are today, what are you seeing as the overall sort of average price drop?
That peak happened around May of last year, and I think at today's average prices for homes, we're probably off about 20% from that peak.
Probably varying a little bit in some areas and some products.
And depending on the product, that's right.
And that seems to, even on the information you've provided here, that seems to be where the historical bottom is when you go through one of these cycles.
Yeah, and if you compare it to that decline in 81, 82, it was more than 20%. And we may be in for a slight further adjustment over the next few months, but I think we're going to see the market pick up again.
Okay, excellent. So I think we're just going to put that one slide back on, Bob, the one that we started with, which, again, just shows basically what happens in the Vancouver real estate market when you take that longer perspective.
That 30-year perspective, we see the trend line and an upward trend line.
Okay. So let's get a little bit more specific in terms of what you see as the opportunities in today's market, because I think we are seeing some changes right now.
Well, Richard, if it's this time in your life to put down stakes and invest in a roof over your head, there isn't a better time to do it than right now, because we've seen a couple of things happen in the market. We've seen this decline in prices, and wasn't that long ago, it was only a few months ago, we were talking about housing affordability and the crisis in affordability. Well, now houses are more affordable. And at the same time, we've seen interest rates stay low and, in fact, in some cases, decline on long-term rates. And so there couldn't be a better time than right now to actually buy a home. Your choice is there with the supply that's on the market. So this is the time to be buying.
So, and what are you seeing in terms of the availability of product on the market? we saw, I think, what probably was a real low point in terms of sales activities last fall. I think some of the stats we're seeing when we compare January to February, fairly significant increases.
We saw an increase actually of 94% February sales over January sales of this year. So that supply is starting to get eaten up. And we have to worry about the fact that fewer people are listing their homes on the market as well. So the caution is you wait too long for the market to bottom out and you may miss that opportunity. The choice will not be there for you.
What are you seeing in terms of the new construction market? We've had, again, a lot of stories around a lot of product coming on. What are you seeing in terms of the take-up? We've seen some really creative offers out in the marketplace.
Well, we know one thing, that we're seeing a slowdown in new construction starts for sure. There are very few projects coming on the market, but we have to remember that there are a number of projects that pre-sold, a year to 2 years ago that are now coming close to completion. And in fact, we're seeing some pretty optimistic signs that people are seeing confidence, are being confident and are seeing optimism in the market because people are firming up on those sales. And we're seeing developers start to work with buyers and ensure that they get those units sold by being creative, as you say. We're seeing developers now offer price reductions for people that are willing to increase their deposits as they get closer to the completion of the units. We're seeing developers allow people that have multiple units to, maybe drop a unit and use the deposit to close on one of those units, so at least they're getting a sale on a unit. We have to remember one thing, and I caution buyers on this. If you entered into a contract to buy a unit that's coming to completion soon, you can't simply walk away from that deposit and think that you're going to be free of any further liabilities. When you entered into a contract, you made an obligation to the vendor that you were going to buy that unit. And if the vendor is going to have to resell that unit, you're responsible for any loss that the vendor faces in having to sell that unit at a lower price.
Yeah, so I think when people are faced with that situation, they just need to simply start engaging in discussions with their realtor and their other professionals and the developers. I think you're right. What we're hearing sort of in the market is that the developers realize that this has caught everyone by surprise, and so there now a number of them are engaging in some pretty positive and constructive discussions with clients now.
The worst thing would be to walk away, to turn your back on it, and do get professional advice. Work with your realtor, turn to a lawyer and get some advice from a lawyer, and then sit down with the developer and see what they're willing to do.
So if we were to look a little ways down the road, the old crystal ball stuff, we're seeing the new projects being delayed in terms of their launch time. Take us sort of 5-7 years down the road, Bob. What do you think?
Well, if we look over the short-term period in that 5-year horizon, say over the next 2 to 3 years, we know a few factors are going to affect supply and demand. We know that we're seeing fewer housing starts, so that means that there's going to be less supply on the market. We're now seeing an upward take in sales, so that means the existing supply on the market is getting eaten up, and we know that the conditions are favorable for purchasers. So we know that one thing's going to happen, and that is that the demand will outpace supply at some point in the marketplace, which means a return to increasing appreciation in prices in the marketplace. I think over the longer term in that 5-year period, we know one thing: Vancouver's a pretty desirable place to live. And we have a limited land supply. We've seen a build out of some of our inner city lands where there isn't simply any land left to build on, and we're now looking at more density in the suburbs. All of that's going to lead to higher prices and less supply. So I think it bodes well for the market overall in terms of price increases.
When you're investing in a place to live for a long term.
Well, as I say, when you look at the long-term trend line, it's always been an upward trend. We're facing some economic realities internationally that we've never faced before, and it's hard to pin down exactly what's going to happen. But if we look back over over history, we know that real estate is always appreciated.
Excellent. Well, thanks very much, Bob.
Thank you, Richard.
Yeah, it's been a pleasure, and hopefully this session's been of value to folks who are watching on the web. We're going to just take a short break right now. We're going to come back. We have a couple of other guests for the second part of the program, a couple of mortgage brokers that will be able to provide some advice on financing options in the market. So thanks for joining this segment, and just hold on for a few seconds. We'll be right back.